Hello everyone. Welcome to second class of past paper discussion sessions for Advanced Taxation examination. I hope you all remember that in previous class we started with our first past exam paper which was of December 2023 attempt. We discussed the first question of that exam paper which was named as Jake. In our today's class we'll be moving towards second question of December 2023 attempt. In these past paper discussion sessions, as I told you in the previous class also, we will be discussing complete exam papers of 5 attempts. Currently, we are discussing the first paper of these discussion sessions, and that's a December 2023 exam paper. We are already done with question number 1. In our today's class, we'll be moving towards question number 2, which is NALI. Our approach remains the same. We first read the entire question with complete patience and concentration. Then we discuss the points which we have to include in our answer, and then we actually draft the answer during the class. I told you in the previous class also that it's very easy for me to just discuss the answer and read it from the examiner answers. But then you will not be able to understand that how you have to actually draft the answer. So if you remember in the previous class, we drafted this complete answer of Jake, which was of 4 pages. The objective is to give you an insight and a confidence that how you have to deal with an actual exam paper. Okay, so let's start with this second question. I want you all to listen to me very carefully. You should assume that today's date is 1st December 2023. Nelly has entered into an agreement to purchase the whole of Rabo Limited's ordinary share capital from its parent company Murada Limited. He has requested advice on the following: the tax implications of Rabo Limited selling an asset it acquired from Murada Limited, the relief available in respect of trading loss incurred before Rabo Limited leaves the group, and the corporation tax implication of the acquisition of the capital assets. See, it is just an introduction screen of the question. It just gives you a brief overview that what this question is about. As I told you earlier also in the previous class, that first time reading of the question is very important. You're able to identify the data that what is included in the question. The following exhibit available on the left-hand side of the screen provide information relevant to the question. The exhibit is Rabo Limited, which is on the left-hand side, which we'll be reading. The information should be used to answer the question requirements within your chosen response options. As you all know that there are two response options, word processor and a spreadsheet. And in the previous class also I taught you that how you have to use these response options. I normally recommend the students to answer their complete question in the word processor document only, and wherever they have to do calculation they can use the table. But at the same time, I told this that if someone want to use a spreadsheet for calculation, that's completely acceptable. Let's read this exhibit 1, which is Rabo Limited. Murada Limited and Rabo Limited. Murada Limited has owned 100% of the ordinary shares in Rabo Limited for many years. Both companies are UK resident trading companies. Both companies prepares accounts to 31st of December. On 31st October 2023, Murada Limited entered into an agreement to sell all the ordinary shares in Rabo Limited to Nelly, who is unconnected individual. So Rabo Limited is getting disposed, and the agreement to dispose is done on 31st of October 2023. The sale of shares will take place on 31st of December 2023. Here you need to understand a very important point, that the date when agreement to sale is done, all the loss reliefs get restricted on that date. I'll repeat it again. All the loss reliefs of the group, those all loss reliefs of the group get restricted on the date when the agreement to sale gets done. It's not the actual date when the shares get disposed. So all the loss relief will stop on the date of 31st of October 2023 when agreement to sell the shares was conducted. Okay, we'll be looking at it in more detail when we'll be drafting the answer. Rabo Limited sale of factory. Rabo Limited will sell a freehold factory building on 1st April 2024 for £395,000. Rabo Limited acquired this factory from Murada Limited on 1st September 2020 for its market value of 302,000. Murada Limited had acquired the factory on 1st June 2018 for 266,000 pounds, the factory has always been used for trading purpose. Now, here what you need to understand is that this factory was acquired as a result of intra-group transfer. Because on 1st September 2020, Rabo Limited and Murada Limited were part of group. Just listen to me carefully. When this factory was acquired, at that time they were part of the group because the disposal transaction was planned on 31st October 2023. When this asset was acquired, it was an intra-group transfer. But when it is getting disposed of, at that time, Rabo Limited is not part of the group. It has already left the group. So what you need to understand is that when Rabo Limited was leaving the group, at that time the degrouping charge must have arisen. Because on 31st of October 2023, when the group agreement was ended, when Murada Limited was selling the shares of Rabo Limited, at that time, Rabo Limited had this factory because Rabo Limited is selling this factory later on after leaving the group. So at the time of disposal, the degrouping charge must have arisen. And that degrouping charge must have been charged on the parent company. You already know that degrouping charge is added in the gain of shares, and that arises on the parent company, which is Murada Limited. So on this factory, a degrouping charge must have arisen when Rabo Limited was being disposed. Now, when later on Rabo Limited is disposing of this factory, at that time, we will not be using the intra-group transfer cost, which was the cost plus indexation allowance when the intra-group transfer was done. Rather, we will be using the market value of intra-group transfer date because due to degrouping charge, the asset becomes subject to capital gain tax up till its market value. I know that you must be getting confused in the comments which I have made, but when we will be solving it, it will get more clear. See, normally, when we sell an asset which is acquired through intra-group transfer, in September 2020, Rabo and Murada were part of capital gains group because 100% of the shares were owned for many years. This disposal of the company is done in October 2023. So at the time of intra-group transfer, it was a transfer between the group companies. So it must be transferred at cost, which is 266,000. Normally, when we are disposing the asset, it should be 395 minus 266. But the problem is that on this asset, degrouping charge must have already been assessed on 31st of October 2023 when the group arrangement was being ended. The degrouping charge must have arisen on this asset at that time. And you all know that when the degrouping charge arises, the asset is shifted to the market value, like the gain gets calculated. But that gain is arise on the parent company. The parent company is Murada Limited. Now we need to see that whether the examiner is asking us about the degrouping charge or not. That's a completely separate debate. But when Rabo Limited will be selling this factory, it will not be using this cost. Rather, it will be using this market value because this asset has already been subjected to degrouping charge, due to which the gain till market value must have already been assessed. Still, if you have any query, I'll just say that have some patience. When I will draft the actual answer, it will get more clear. Forecast results for the year ending 31st December 2023. Rabo Limited and Murada Limited. Trading profit and loss here is 72,000. In Murada, it's 840,000. Then we have property income. Rabo Limited is not able to relieve its trading loss in an earlier accounting period. Rabo Limited is expected to make a trading profit of around £30,000 in the year ended 31st December 2024. Rabo Limited's forecast plan and capital expenditure. NALI is considering making significant changes to the company operations over the next few years. The following assets will be acquired by Rabo Limited on 1st June 2024 from an unconnected seller. A second-hand warehouse costing 312,000, including 71,000 pounds for the land. The seller had acquired the land in May 2010 and the warehouse had been constructed on it later that year. So it will not be qualifying for structure building allowance because it's a very old asset. I hope you all remember that structure building allowance was not available in 2010 constructions. An additional 5 delivery vans, each costing 35,000 pounds each. These acquisitions will all be brought into immediate use in the company's trade. Now let's look at the requirements that what he's asking to us. Now I want you all to listen to me carefully. You should assume that today's date is 1st December 2023. Part A. In relation to Rabo Limited sale of leasehold factory, calculate the after-tax proceeds and explain how the base cost of this factory is being calculated. You should ignore Rabo Limited's capital acquisitions and trading loss for this part of this question. 6 marks. Believe me, it's a very easy requirement. When the requirement will be difficult, I'll tell you myself that, okay, this one is difficult, you need to think. But this is, believe me, very easy requirement. That Rabo Limited is simply disposing of the factory. The factory is getting disposed of for 395,000. Instead of cost, you will be using this market value. Originally, this cost of 266,000 should have been used as it was an intragroup transfer. Okay. In case of intragroup transfer, the assets are transferred at cost plus indexation allowance. But here, since on this asset, the degrouping charge must have been arising when Rabo Limited left the group, like when Murada Limited sold its shares actually on 31st of December 2023, at that date, the degrouping charge must have arisen on this asset. Now, that degrouping charge was on the parent company. But due to that degrouping charge, the asset would be assessed at the market value, and now only subsequent gain will be calculated. So examiner knew that what he's asking, that's why he specifically focused that how the base cost of the factory is calculated. You have to comment on that. 6 marks, believe me, it's an easy one. Like for 6 marks, I would say that it's too many marks on this requirement. Okay, so the question name is Rabo, and we are attempting this part A. Okay, in relation to sale of leasehold factory, we have to do these calculations. You can simply copy paste the requirements, that's acceptable. And specifically when you talk about question number 2 and 3, there are no marks for communication skill, so there is no specific format. Just you need to make sure that you analyze in detail, analysis and evaluation, commercial acumen and skepticism. See, at advanced taxation level, these professional skill marks are separately not a big concern. Like when you write an answer, you already analyze the rules in detail, you relate it to the scenario, you get the evaluation marks. If there is any situation of loss relief planning, so that gains marks of commercial acumen. Skepticism means to question the data, like if there is any data on which the examiner asks you himself, not by your own self, when the examiner asks it himself that, okay, you have to talk about the source of that amount, or you have to talk about that whether that amount is calculated correctly or not. So then you have to do, like for example, in some past exam papers, what examiner do is that he provides you a certain calculation and asks you to verify it, like make sure that it's correct or not. So you re-perform the calculation. So then that's a skepticism skill. But in advanced taxation, these professional skill marks are not a big concern separately. Reason being is that when you answer, when you develop your answer, you automatically cover these issues. Okay, so in relation to Rob Limited sale of the factory, calculate the after tax proceeds and explain how the base cost of this factory is calculated. So let's look at it. The factory is getting disposed for 395,000. In the base cost, we'll be using the market value of intragroup transfer date, which is 1st September 2020, and that's 302,000. So let's look at it. I want you all to listen to me carefully. I will add a small table here. Disposal proceed. So the disposal proceed for this is 395,000. Let me copy the pound sign. 395,000. The base cost, or the cost which you can say, that's 302,000, for which we will write a comment, note 1. We'll graph the comment, okay, and that will give you the chargeable gain. So 395 minus 302, it's 93,000 of the chargeable gain. Let's draft the comment on the base cost. Now, freehold factory was originally acquired by Rabo Limited through an intra-group transfer on 1st September 2020, if I'm not wrong. On 1st September 2020. It should be, or you can say it was originally transferred. It should be originally transferred at its cost of Murada Limited as it was an intra-group transfer for tax purposes. Okay, so for tax purposes, it should be transferred at its cost. Cost of Murada Limited was how much? Was, if you go and look at it, cost of Murada Limited was 266,000. I'll repeat the things again also, so if you have any concern, just have some patience and listen to me. However, on 31st December 2023, when Murada Limited disposed of shares of this Rabo Limited, a degrouping charge must have arisen on this freehold factory, as Rabo Limited owned this intra-group transfer asset at the date of leaving group, and it was within 6 years of intra-group transfer. Due to degrouping charge, this freehold factory must have already been assessed till the market value on intra-group transfer date of how much? Of 30,000. Therefore, when Rabo Limited will sell this factory later on, market value of intra-group transfer date will be used as a base cost. Let me repeat it again. I know that this is one of the things in which the students get confused. And primarily, I will say that the examiner is giving you 6 marks majorly for this comment on base cost. Like, it was the most interesting thing in this entire part. See, like writing down the disposal proceed is nothing difficult at advanced taxation level. Okay. Now, for the base cost only, the examiner wants to look at the student's alertness, that how much alert he is. Freehold factory was originally acquired by Rabo Limited through an intra-group transfer on 1st September 2020. Okay, like you can go and read it. We got it on 1st September 2020 from Murada Limited. Now, Murada Limited was our group company. Murada Limited owned 100% of our shares. Okay, it should be originally transferred at its cost of Murada Limited, as it was intra-group transfer for tax purposes. Indexation allowance is frozen after 31st December 2017. You already know that. So that's why I'm not commenting on indexation allowance. Cost of Murada Limited was £266,000. However, on 31st December 2023, when Murada Limited disposed of shares of Rabo Limited, a degrouping charge must have arisen on this freehold factory, as Rabo Limited owned this intra-group transfer asset at the date of leaving group, and it was within 6 years of intra-group transfer. Now see, if someone is forgetting the rules of degrouping charge, just go in the summary notes, write degrouping charge, and you will find this degrouping charge. And here comes that degrouping charge will arise if company receiving the asset is sold within 6 years of intragroup as transfer, such that the asset is still owned at the intragroup transfer date. Okay, so all of these rules, see, the complete rule of degrouping charge is available. So as I told you in the previous class, that these summary notes are really a lifesaver document when you're in last month of your examination. So degrouping charge must have arisen on this asset. Now, due to degrouping charge, this freehold factory must have already been assessed till the market value and intragroup transfer date. If you know, degrouping charge is basically the tax on the market value on the intragroup transfer date, that if it would be a normal transfer, what CGT would be arising on that date. So now, therefore, when Rabo Limited will sell this factory later on, market value of intragroup transfer date will be used as a base cost. And that base cost is 302,000. See, because Rabo Limited is selling this factory at a later date, which is 1st April 2024. Now comes the chargeable gain. On this chargeable gain, we have to calculate the corporation tax. Corporation tax on chargeable gain. Indexation allowance will not be available, as purchase is of after 31st December 2017. Okay, and you all know that indexation allowance have already been frozen. Now, what will be the corporation tax on this chargeable gain? Now, if you go and read the scenario, it's written that Rabo Limited is expected to make a profit of around £30,000 in the year ending 31st December 2024. And obviously, this disposal of 1st April 24 also lies in the year ended 31st December 2024. So now, I'll write a comment. Rabo Limited will already have trading profit of £30,000 in year ended 31st December 2024. Okay, and disposal date, if you want to write it, disposal date is 1st April 2024. So now if Rebel Limited will already have trading profit of £30,000 in year ended 31st December 2024. So when if I'll add this chargeable gain of 93,000, so I hope you all remember the corporation tax rates. Till £50,000, it's lower limit. Then 50,000 to £250,000, it's the marginal rate portion. And then above £250,000, it's the mean rate portion, which we call as upper limit. Now, in order to calculate the corporation taxes, there are two possible approaches. One is the marginal relief treatment, and other one is to use the marginal rate concept, in which we use the band approach. So what I will be doing is that just listen to me. £50,000 is my lower limit minus £30,000. So on £20,000, I will apply 19%. Basically, I'm using that band approach. Okay. It's completely on the choice of the student. Okay. I'll repeat the things again. So if you have any query, just listen to me carefully. This gives me 3,800 and then £93,000 minus £20,000. On remaining £73,000, I will charge 26.5% into 26.5%. So that gives me 19,345. I know that you must have some confusion, but just listen to me. So total corporation tax on gain will be 23,145. And you have to calculate the post-tax proceeds. Post-tax proceeds will be, now your disposal proceed was 395,000. I know that computation of tax might be difficult for some students, but just give me 1 minute. I'll explain you again also. Let me complete it. Post-tax proceeds will be, it will be 371,855. Now let me repeat it again. First of all, this corporation tax computation. See, when we talk about corporation taxes, you have two approaches to calculate the corporation tax. One is the concept of limit. In the limit approach, we apply the single rate and then we go for marginal relief. Now, since Rabo Limited already have trading profit of 30,000, when 93,000 will be added in it, obviously it will be between upper limit and lower limit. The lower limit is 50,000, upper limit is 250,000. When you are between upper limit and lower limit, you have to use mean rate on the entire profit and then you have to go for marginal relief. That's one approach. You remember the marginal relief? Upper limit minus augmented profit multiplied by marginal fraction 3 over 200 multiplied by taxable income divided by augmented profit. Now, I hope that you remember this. Obviously, we are in the past paper revision sessions. Or if you have forgotten the corporation tax computation rules, you will simply write corporation tax. Okay, the corporation tax would be written. And here comes your corporation taxes. In the corporation taxes, you can use the mean rate concept also, that after 1st April 2023, the corporation tax rates have changed. Okay, so if augmented profit is less than lower limit, you can use the 19% rate. If it's between lower limit and upper limit, you have to use main rate along with marginal relief. And above upper limit, you just use the 25% rate, which is the main rate. But instead of this, if there are no dividends in the question, you can use these bands concept also, like 19%, 26.5%, and 25%. See, I will say it again. If you don't remember the basic computations, you need to go and revise it. Because obviously at this level, I'll not be telling you about the basic computation rates. If I'll just give you the overview of what we are doing in the question, Rabo Limited already have a trading profit of 30,000. So now if I talk about the lower limit, which is 50,000, so from that 50,000, 30,000 is already used. So on 20,000, I use 19%, and on the rest, I applied the marginal rate, which is 26.5. So why didn't you apply the main rate? If I would have used that main rate approach, then I would have to use the marginal relief also, which is a complex calculation. Since there is no dividend in the question, I have taught you all, you can simply use these bands concept also so that you can avoid that marginal relief approach. Okay, it's normally used in the losses question, but that's permitted in the question to use it. And that approach is provided by the examiner also. So let me repeat it again. In relation to Rabo Limited sale of freehold factory, calculate the after tax proceed. Now this was your disposal proceed. For the cost, it was an important thing, like the examiner expected a good comment here. See, originally this factory was acquired through intragroup transfer. So when we talk about intragroup transfer, the assets are acquired at their original cost. The cost of the group company, not the transfer value. So that cost should be £266,000. However, on 31st December 2023, when Murada Limited disposed of the shares of Rabo Limited, a degrouping charge must have arisen on freehold factory as Rabo Limited owned this intragroup transfer asset at the date of leaving group, and it was within 6 years of the intragroup transfer. Due to degrouping charge, this freehold factory must have already been assessed till market value on intragroup transfer date of 3/02/2000. Despite that degrouping charge was assessed on the parent company, but for the tax purposes, now market value will be used for future CGT calculation. Okay, we deducted 302, we got the chargeable gain. Do remember we are talking about corporation taxes, so there is no annual exemption. Okay, corporation tax, 30,000 profits already existed, so on 20,000 you applied 19%, and on the remaining you applied the marginal rate of 26.5. And this gives you your total corporation tax on the gain. Disposal proceed less the tax, you get your post-tax proceeds. I hope that you people have understood it. Okay. Now, if you look forward, now the 6 marks are done. We had to ignore the losses and capital acquisitions. So yes, we ignored, we didn't thought about this loss and the capital acquisition thing when attempting this part of sale of factory. Now let's move forward. Part B1. Explain the maximum possible amount of Rabo Limited trading loss for the year ending 31st December 2023, which can be transferred to Murada Limited. So yes, I referred this issue when we were reading the question that the agreement to sell Rabo Limited was done on 31st October 2023. So the group loss reliefs will stop on that date. So the maximum amount of loss which can be surrendered, so that will be prorated. Like 72,000 is for the year ended 31st December 2023. We will prorate it to 10 months. Okay. So let's look at this part also. Now, first, let's attempt this. That was the maximum amount of Rabo Limited trading loss that can be surrendered for the year ended 31st December 2023. Let's look at that part, that how we have to deal with it. So if we look at the financial data which is provided to us, forecast results for the year ended 31st December 2023. Rabo Limited is making a loss of £72,000. At the same time, Murada Limited has trading profit of 840 plus property income of 43,000. So I can say that Murada Limited has total income of 840 plus 43. The total income is 883,000. You all know that the group relief hits the total income. Okay, but since the agreement to sale was done on 31st of October 2023, so the loss relief will be ending, will be stopping at that date. Okay, so let's draft the answer for it. uh, Rabo Limited and Murada Limited had been part of 75% group during the year ended 31st December 2023 for part of the year, as Murada Limited owned 100% shares of Rabo Limited. However, 75% group loss relief will be restricted on the date agreement to sell Rabo Limited was signed by Murada Limited. This date was 31st October 2023. This means that group loss relief will be available for 10 months only during the year ended 31st December 2023. Let me repeat it again. I believe that it shouldn't be a difficult one considering that I've already discussed this multiple times. The Drabo Limited and Murada Limited had been part of 75% group during their ended 31st December 2023 for part of the year, as Murada Limited owned 100% shares of Rabo Limited. However, 75% group loss relief will be restricted on the date agreement to sell Rabo Limited was signed by Murada Limited. So the date when the arrangements to end the group start, at that date, the group loss relief is restricted. It's not the actual date when you sell the shares. So the date when the agreement was signed, it was 31st October 2023. So the loss relief will be for 10 months only. Now, maximum amount of trading loss which Rabo Limited can transfer to Murada Limited will be lower of two things. Okay, lower of Rabo Limited's trading loss for 10 months. So that will be, what will be the trading loss? It was 72,000 for the year ended 31st December 23. 72, sorry. Let me copy the pound sign. 72,000 pounds divided by 12 months multiplied by 10 months. So that will be 60,000 pounds. And Murada Limited's total income for 10 months. So Murada Limited's total income for 10 months will be 840 plus 43, 883,000 divided by 12 months multiplied by 10 months. So that will be 735, 833. So obviously lower off will be 60,000. Maximum amount of loss relief will be of 60,000 pounds. So I particularly believe that again, for a student at advanced taxation level, it's an easy one. Like the maximum amount of group loss relief which will be able to be claimed in the year ended 31st December 23, considering that the shares are to be sold. So when the shares are getting sold, so the loss relief will get restricted. It do not get restricted on the actual date of sale. Rather, it gets restricted when the agreement is entered. So that agreement was entered on 31st October 2023. So the loss relief will get restricted. It will be for 10 months only. It will be lower off and the maximum amount of loss relief will be 60,000 pounds. I believe that it's an easy one. What else is asking? Part B2. Explain the tax consequences. Okay, let me paste it here first. Explain the tax consequences for Rabo Limited of using some or all of the loss relief and explain any potential issues associated with such course of action. See, if Rabo Limited do not surrender it to the group and keep the loss for itself. See, what are the tax consequences if Rabo Limited keeps the loss for itself? Like what will happen? So let's go and read it. Basically, Rabo Limited is not being able to relieve its loss in earlier accounting period. Now, Rabo Limited is expecting that it may use the loss in the next year, like when it will have a profit. And even that profit amount is also insufficient. So if Rabo Limited will keep the loss for itself on, like I'll use it in the future. So there is a possibility that it will not have a profit in the future period. And since the group is being seized, so if it will not claim the group relief now, the group relief option will not be available later on because Rabo Limited will no more be part of the group in the future years. So if Rabo Limited will keep the loss for itself and if it do not have sufficient profits in the future year to use it on its own, then maybe the loss relief will get delayed. And one more important thing which you need to understand is that there is significant change in ownership. If there will be significant change in activity of the business in next 5 years, the loss relief gets restricted. If you remember the loss relief restrictions, if you remember, and if you're forgetting, just go to the summary notes and go and write here loss relief restriction. Okay, the loss relief restrictions, that if there is major change in activity of the company along with major change in its ownership, the losses get restricted. It's 3 years before or 5 years later on. So obviously 3 years before situation is not applying here, but if there will be major change in activity in next 5 years, the loss relief will get restricted. And NALI is considering making significant changes to the operations. Currently, there is no major change like acquiring a warehouse or delivery van is not an issue. But if there will be a significant change in its activity, then the losses may get restricted. So what consequences may arise? Okay, so what we can write is that if Rabo Limited will keep some or all of the loss amount for relief against its own incomes, then a potential issue is that Rabo Limited may not have sufficient income in future years to use the loss amount. Okay, Rabo Limited will no more be part of any group after disposal by Murada Limited. Therefore, if it will not be able to use loss on its own, then relief will get delayed till it gets profits in future period. Okay, further, past periods or past years of Rabo Limited show that it do not have sufficient income. It do not have sufficient income of its own to use the loss amount. So obviously, if you keep the loss for your own and you say that, okay, I'll use it in the next year. Now, you have an expectation that you will make a trading profit of 30,000 pounds. That's not necessary. Maybe you don't have sufficient trading profits to use the loss on your own. So that's a concern, that's a risk. Secondly, due to change in ownership of Rabo Limited, as Murada Limited has disposed of its share capital to NALI, another risk exists to loss relief is that if within 5 years of change in ownership there will be major change in activity of Rabo Limited, then its losses will get restricted and they will not be able to be relieved in post-acquisition period. What you need to understand is that if there is change in ownership along with major change in activity, the losses get restricted. Okay, loss amount of pre-acquisition period will get restricted due to this restriction. Okay, so let me repeat it again. See, I say to my students always that I discuss the points with you people, and that's very easy for me. But when I graph the answer, it takes some extra time, but that gives you an idea that how you have to deal with the actual exam paper. Like grafting actually is a bit time consuming, but that's very important for the students. Let me repeat it again. Maximum possible amount of loss relief which we can claim. So it was very much simple. The agreement to sell Rabo Limited was done on 31st of October 2023. So the loss relief gets restricted on that date. You cannot claim loss relief for more than 10 months period, creating loss of Rabo Limited and Morada Limited's income for 10 months. So it gets restricted to lower off and the tax consequences of using some or all of the loss itself. Now, what you need to understand is that Rabo Limited do not have an income of its own. If you'll keep the loss with yourself that, okay, I'll use it in the future year, there's a risk that maybe you don't have income in future year because you are not able to relieve the loss on your own in an earlier accounting period. And it's your expectation that you'll have a trading profit. Maybe you don't have a trading profit, like you got a loss again, so your relief may get delayed. Secondly, due to change in ownership of Rabo Limited, as Morada Limited has disposed of its share capital to Nally, another risk exists to loss relief is that if within 5 years of change in ownership, there will be major change in activity of Rabo Limited. Currently, there is no major change. Nally is considering acquiring a warehouse or delivery vans. That's not a significant change. Okay. If there will be a significant change in activity, then the loss relief will get restricted more. And in that case, the pre-acquisition losses would not be relieved in the post-acquisition period. Okay. So if you look at it, how many marks are done? 6 plus 7, 13 marks are done. I particularly believe that it's not difficult. Like making the CGT calculation, only this base costing was difficult. Or even I won't say it's difficult, it's just about good at rules. Then the maximum possible amount of loss relief which can be claimed. The post acquisition, the disposal of the company when you're leaving the group, the relief gets restricted. And if we keep the loss for our own, then obviously there is a risk that we may not have sufficient income in the future years. Let's look at part C. Explain with supporting calculation the rollover relief and capital allowances which may be claimed as a result of the planned acquisitions on 1st June 2024 and the total corporation tax savings which these will give rise in the year ended 31st December 2024 for 7 marks. Okay, so let's copy paste this requirement here. Let's look at it. That what are the relief we'll be getting in relation to the planned acquisitions which we are doing on 1st January 2024. So these are the planned acquisitions. Let's go and read it and attempt this thing also. Believe me, it's an easy one. Okay, let's look at it. Rabo Limited, future plans and capital acquisitions. Nally is considering making significant changes to the company's operations over the next few years. The following assets will be acquired by Rabo Limited on 1st June 2024 from an unconnected seller. A second-hand warehouse costing £312,000, including £71,000 for the land. The seller had acquired the land in May 2010 and the warehouse had been constructed on it later that year. Now, you all know that structure building allowance is not available for constructions which are done before 2018. Now, this construction was done in 2010, so this will not be qualifying for structure building allowance. Again, I'll say that if you have forgotten any rules, you just need to go to the summary notes, search the relevant rules. Like if you want to look at structure building allowance, you just write structure in the search and you get the rules of structure building allowance. So it is only available on the building structures constructed after 29th October 2018. And for our examination, the applicable date is 1st April 2020. So, on this warehouse, the structure building allowance will not be available as it was constructed in 2010. Then, an additional 5 delivery vans, each costing £35,000. So, delivery vans are plant and machinery and they will be qualifying for capital allowances. These acquisitions will all be brought into immediate use in the company's trade. Now, these are the Rabo Limited's future plans and capital acquisitions. Let's go and look at the requirement one more time so that we can draft it. Explain with supporting calculation the rollover relief and capital allowances which may be claimed as a result of the planned acquisitions on 1st June 2024 and the total corporation tax savings which these will give rise in the year ending 31st December 2024. So we have to comment on rollover relief and the capital allowance implications and the tax savings which will be arising, and it's a requirement for 7 marks, which I believe is an easy one. Okay. Now, first of all, if I talk about purchase of land and building, this warehouse is land and building. It also includes the land value. So, purchase of land and building is a qualifying investment for rollover relief. And this investment is done on 1st June 2024. The disposal of factory was done in 1st April 2024. So since it's within 36 months of the disposal date, so it's a qualifying period of reinvestment. So yes, rollover relief will be available on reinvestment in second-hand warehouse. And if I talk about the 5 delivery vans, it's a plant and machinery on which capital allowances will be available. It's not a fixed plant and machinery on which rollover will be available. So on delivery vans, there is no rollover relief, but it will qualify for capital allowances. But the purchase of warehouse is a land and building, it's a qualifying asset, and reinvestment is done within 36 months. So, yes, warehouse will qualify for rollover, but delivery vans won't be qualifying. Again, I'll say that if you're forgetting any rules, just go to the summary notes like write rollover relief, and here you go. You'll get the relevant rules: land and building, fixed plant and machinery, goodwill. Reinvestment period is within 3 years after or 1 year before the disposal date. Okay, so let's draft the answer in relation to it. Now, purchase of second-hand warehouse on 1st June 2024 will qualify for rollover relief as it is a land and building which is a qualifying asset for rollover relief. Further, reinvestment is done within qualifying period as factory was sold on 1st April 2024, whereas reinvestment is being done on 1st June 2024, which is within 36 months of disposal date. Let me repeat it again. I believe that it's just a basic discussion. We have purchased this second-hand warehouse on 1st June 2024, whereas the factory building was sold on 1st April 2024. So it's within 36 months of the disposal date, and the warehouse which is purchased is a qualifying asset as it's land and building. Okay, so I'll repeat it again. Purchase of second-hand warehouse on 1st June 2024 will qualify for rollover relief as it is a land and building, which is a qualifying asset for rollover relief. Further reinvestment is done within qualifying period as factory was sold on 1st April 24, whereas reinvestment is being done on 1st June 2024, which is within 36 months of disposal date. Now, disposal proceed of factory was how much? If you go and look at it, we got 395,000 as a disposal proceed of factory was 395,000, whereas amount reinvested in warehouse is, how much is it? It's 312,000, including the land. So yes, rollover relief is on including land value, whereas amount reinvested in warehouse is 312,000. It is a situation of partial reinvestment. Therefore, part of the gain will be deferred and partially it will be chargeable now. Okay, gain chargeable now will be lower of gain and cash in hand amount. Okay, gain on disposal of factory was, if you remember, on disposal of factory was, we just calculated it ourselves. The gain on disposal of factory was 93,000 pounds, if you remember. Gain on disposal of factory was 93,000 pounds, whereas cash in hand after reinvestment is 395,000 pounds minus 312,000 pounds. So 395 minus 312, the cash in hand is 83,000 pounds. Lower off will be chargeable now, which will be cash in hand of 83,000 pounds. Remaining gain of how much? 93,000 minus 83,000 pounds is equal to 10,000 pounds will be deferred. So let me repeat it again. If you have any concern in your mind, it will get clear. See, the purchase of second-hand warehouse, this second-hand warehouse which they have purchased on 1st June 2024 will qualify for rollover relief as it is a land and building which is a qualifying asset for rollover relief. Further reinvestment is done within qualifying period as factory was sold on 1st April 2024, whereas reinvestment is being done on 1st June 2024, which is within 36 months of disposal date. Now, disposal of factory was for £395,000. The disposal proceed was £395,000, whereas amount reinvested is 312. So obviously, it's a situation of partial reinvestment. You haven't reinvested the entire amount. Therefore, part of the gain will be deferred and partially it will be chargeable now. So gain chargeable now will be lower of two things, gain and cash in hand amount. Gain on disposal of factory was £93,000, which we ourselves calculated above in the part A, that was 93. And our cash in hand is £83,000. So lower off will be chargeable now, which will be cash in hand of £83,000, and remaining gain of £10,000 will be deferred. Okay. Now purchase of second-hand warehouse. Warehouse will not qualify for capital allowances as it is not a movable plant and machinery. As it is not a plant and machinery. Further, structure building allowance will also not be available as it was constructed in 2010 and there is no SBA on constructions before 2018. Okay, October 2018 is the date from which the structure building allowance was launched. Now, if I talk about delivery vans, purchase of delivery vans will qualify for capital allowances, as purchase of plant and machinery. Okay, there will be no rollover relief on it as it is not a fixed plant and machinery. Okay, delivery vans are not fixed plant and machinery, so there is no rollover relief on it. Now you can just go and refer it. That's only available on fixed plant and machinery. Obviously, delivery vans are movable plant and machinery. So delivery vans will qualify for capital allowances. They'll not be qualifying for rollover relief. Okay, now purchase of delivery vans. Delivery vans for how much? If you go and refer it, we have purchased 5 delivery vans, each costing £35,000 each. Purchase of delivery van had a total cost of how much? £35,000 multiplied by 5 vans. So that will be £175,000. Okay, this will qualify for capital allowance immediately as it will be covered by annual investment allowance. Okay, it will become an allowed expense in year of purchase. Okay, now you must be thinking that, sir, whether delivery vans are classified as cars or they are purchased as a normal plant and machinery. So here you need to understand one basic rule. See, delivery vans are not treated as cars, they are treated as normal plant and machinery. On car, there is no AI. But delivery vans are not treated as cars, like they are not the normal used cars. They are plant and machinery which we use for our business activity. So that's specifically given by the tax department that delivery vans should be treated as plant and machinery rather than cars. So when they will be treated as plant and machinery, you will be getting annual investment allowance on them and it will be like a normal asset. So this purchase of delivery vans of £175,000 will qualify for capital allowances immediately as it will be covered by annual investment allowance. So we have to comment on the rollover relief and capital allowances which may be claimed as a result of planned acquisition. So on the purchase of second-hand warehouse, we stated that rollover relief will be available and 10,000 of the gain will be deferred. It will not qualify for capital allowances or structure building allowance. Delivery vans will qualify for capital allowances as purchase of plant and machinery. There will be no rollover relief as it is not a fixed plant and machinery. So you'll be getting capital allowances but no rollover relief on it. Now, the total corporation tax saving, these will give rise in the year ending 31st December 2024. Due to planned investments, Rabo Limited will be able to defer its gain by £10,000, and it will also be able to claim a capital allowance deduction of £175,000. In total, its taxable profits will reduce by £185,000. See, I'll repeat it again. When you defer your gain, as a result, your chargeable gains will reduce. So obviously your corporation taxable income will be reducing. And when you claim disallowed expense, due to that also, your taxable income will reduce. Now, apparently the company do not have sufficient income because it was stated that Rabo Limited only has a trading profit of around £30,000. And the gain which we calculated was £93,000. So Rabo Limited do not have sufficient income in the year. But the question has said that what is the total corporation tax saving which this can give a rise? So you can write it as an assumption. Assuming that Rabo Limited will have sufficient income to claim the allowed expense of purchase of delivery vans, total corporation tax saving will be, see, currently their expected profit is just £30,000. So from £30,000 trading profit, obviously you cannot claim the capital allowance of 175,000. But since the question has stated this word that the total corporation tax saving which will be arising, so we wrote an assumption that's acceptable at the exam level that you can assume and write it. Assuming that Rabo Limited will have sufficient income to claim an allowed expense of purchase of delivery van, total corporation tax saving will be. Now you have total deduction of 185,000. Your profits are getting reduced by 185,000. So what will be your total corporation tax saving? So if we use the band approach on the first £50,000, it's 19%, and then £185,000 minus £50,000 on remaining £135,000, it's 26.5%. Let me repeat it again. If you have any query, just listen to me carefully. First, I can do the calculations completely. £50,000 into 19%, that's 9,500, and 185,000 minus 50,000, on that you will be claiming 26.5%. So that will be 35,775. Just a second, 135,000 into 26.5. Yes. So total corporation tax saving will be plus 9,500. So that will be 45,275 pounds. Now let me repeat it again so that if someone has any query, it gets clear. Okay. Now with this, our question is completed. First of all, purchase of second-hand warehouse will qualify for rollover relief as it's a land and building, and land and building is a qualifying asset for rollover relief. Now, disposal proceed was 395. We are reinvesting 312. So cash in hand is 83, whereas chargeable gain is 93. So lower off will become chargeable now. Always remember, lower off becomes chargeable now, and remaining of the gain gets deferred. So 10,000 is getting deferred. Now, purchase of second-hand warehouse will not qualify for capital allowances as it's not a plant and machinery. Structure building allowance will also not be available as it was constructed before 2018. Delivery vans will qualify for capital allowances as purchase of plant and machinery. It's not a vehicle, it's a normal plant and machinery. Like you don't see it as a car. On cars, there is no AIA. There will be no rollover relief as it is not a fixed plant and machinery. For rollover relief, it's necessary that it should be a fixed plant and machinery. Purchase of delivery van had a total cost of £175,000. This will qualify for capital allowances immediately as it will be covered by annual investment allowance. So due to planned investment, your gain is getting deferred and you are getting an allowed deduction of £175,000. So in total, your taxable profits will be reducing by £185,000. See, now currently the problem is that company has the trading income of £30,000. If you claim a capital allowance of 175, it will become a trading loss. Company has chargeable gain of 93,000. So that loss will offset the total income. But then also complete saving will not arise in the current year. Complete saving cannot arise because you have a gain of 93,000. Okay, from that 93, 10,000 is getting deferred. So 83,000 of the gain is still chargeable. You have trading profit of 30,000 pounds. If you will offset 175,000 capital allowance, so it will become a loss of 145,000. You will offset the total income, but then also you'll not be able to relieve the entire amount. So we wrote an assumption. Why we wrote an assumption? Because the question stated that what is the total corporation tax saving arising due to it. So we wrote an assumption that assuming Rabo Limited will have sufficient income to claim the allowed expense of purchase of delivery vans, total corporation tax saving will be. Now, assuming that that will be the total income Rabo Limited has. So first 50,000 pounds, that's lower limit, which will be relieved at 19%, and the remaining will be relieved at marginal rate. Reason being that the upper limit is 250,000. It's still between upper limit and lower limit. So total corporation tax saving will be 45,000 to 75,000 pounds. Now, if someone wouldn't have written this assumption and they would have only claimed the relief on the available income and gains, that would also be acceptable. But the better approach was to write the total saving. That's why we wrote that assuming that sufficient income will be available, so this will be the relief amount. Now, if you look at it, we are done with the question. If you look at the entire answer, I particularly believe that it's not a difficult one. First, in respect of the sale of the freehold factory, we have to calculate the capital gain tax. The only difficult thing here was 302,000 working. The reason being was that students may pick up the cost of intra-group transfer, which was the original cost of the parent company Murada Limited. Okay, but since degrouping charge must have arisen, so instead of cost, we'll be using the market value of intra-group transfer date. Then it was a routine one. Then maximum possible amount of loss relief which will be available. So we just needed to comment that since it's leaving the group in the 10th month, so relief will be restricted to 10 months only. Then if it keeps the loss for itself, then there is a risk that maybe do not have income in the future years. As a result, the loss relief may get restricted. And since there is change in ownership, if there will be change in activity in the next 5 years, so that will restrict the loss relief. Then purchase of warehouse, it qualifies for rollover relief. There's no capital allowance or structure building allowance. Delivery vans is like purchase of plant and machinery. You get capital allowances on it. There will be no rollover relief as it is not a fixed plant and machinery. Then you commented on the corporation tax saving which will be generated. So I particularly believe that this question is not a difficult one. Still, if you have any query, you always have my WhatsApp number to connect with me. So now we are done with the second question of December 2023 attempt. In the next class, we'll be doing the question number 3 and the first paper is done. In this way, we'll be doing 5 complete attempt papers in these recorded sessions, and then I'll be giving you 3 mock exams to attempt on your own and send me for marking and feedback. See, this detailed activity will give you an insight that how you have to deal with a complete exam paper. Okay, so in the next class, we'll be looking at question number 3. I hope that you are understanding the things and these sessions are contributing towards your understanding of the examination. Okay, thank you everyone.